Good evening, Doc Severson for the TheoTrade report for Tuesday, June 12th. Okay, tomorrow we have one of our big four Fed reports for the year. The forecast and the policy announcement comes out at 2 o'clock Eastern, 1 o'clock Central, and then the Fed Chair conference starts half an hour later at 2:30 Eastern, 1:30 Central. Now, it's pretty much a foregone conclusion, given the strong jobs reports that we've had lately and a strong earnings cycle, that we're going to be raising rates tomorrow. And so this is why you see the current rate here is 1.5 to 175 for the Fed discount rate, and there's a 96% probability this is going to go up by a quarter point tomorrow. Okay, so that isn't really the drama. The whole drama does always revolve around what happens not only during the Fed policy announcement at 2 o'clock, but also what could happen during the press conference. Now, this is not Powell's first press conference. He's already been through one of these before, did just fine. Expect him to do the same. Unlike his predecessors, which it seemed like in the first year, within the first couple of meetings, they did something to rock the market. So don't be surprised if we do have something that slips out. Although Powell seems to be pretty well coached for what he does. Now, just out of curiosity, what we can also do here is we can see the probabilities for the next big releases. Now, we can just skip the 1st of August and 8th of November because rarely does anything change on the Fed meetings that are not the major quarterly ones. So if we go out to the 26th September, we can see that here's the current rate, and they're assuming that not only is the rate going to be bumped up this time, but it's also going to be bumped up again another quarter point in September. And then as we get out to December, this is where things get a little rocky again. This is where it currently is. This is the assumption for tomorrow, that it's going to be at this level tomorrow. And then there's pretty much a 50-50 probability distribution between whether or not they hold or whether they hike once again in December. Now, jumping over to the S&P, as I know a lot of bears are out there going, oh, they can't raise rates. If they raise rates, it's going to tank the market. Well, that hasn't happened yet. We've already raised rates recently. I do want to remind you that we have had a rising rate environment in the past, and the market did just fine during that. Now, a couple of things about that. We didn't have nearly the amount of debt that we have right now. So any time that they are raising rates, they're actually increasing their interest payments quite a bit, and this could be unsustainable. So this is where we're going to see a lot more volatility than we ever saw back here at this level. So every time, it's almost like that old child's game of the straw that breaks the camel's back. Which quarter point rate hike will actually break the back of the equities market? Until that point, the market is telling us right now that it's headed higher. It's gone through this consolidation over the past 5 months or so. We've seen a clear change in polarity to the upside now, with a weekly uptrend as well as a daily uptrend. So we're seeing higher highs, higher lows all the way along here. Now, what's interesting is that the price is coming into, it's sliding into home for tomorrow's Fed report at an exhaustion level. So here's what I'm thinking will happen. If we do see a positive reaction to the Fed announcement and the press conference, and if the price gets anywhere near this upper expected move for the week, I believe that will be sold into very strongly. So we'll end up with something like a shooting star candlestick if we do see positive price movement to the upside tomorrow. On the other hand, if we do see uncertainty coming into the market, if we see a negative reaction, there's actually quite a bit of distance before we get to support. But this lower expected move for the week is going to be rock solid support the first time through at about 274 on the spiders, or 2740 on the full S&P. So again, with this level of exhaustion here, any kind of positive price move, and especially anything that gets us near that upper weekly expected move, I believe is going to be an excellent fade setup. So bearish fade setup, because I think what the market needs at this point is probably at least a week of rest after this very strong rally that we've seen. So it makes sense that we would consolidate in this area for a week. We don't really have any catalysts coming up, so there's nothing really scheduled. We don't have earnings coming up until we get into July. We're finishing off the current round of earnings, but there's nothing really market moving coming up. And while I think it's unlikely for the price to come all the way down here, I believe also this is a fade against the lower expected move, given the amount of support that we have at that level. So given all that, not only is the expected move a great setup this week, but also this looks like a great place to start a duration iron condor position. Now, for those of you that are more bearish on the tape, that think that this every day is just a ticking time bomb and we're going to start heading lower from here, that could happen. I mean, anything could happen in the tape, even though the price has shown a stated direction and a preference to the upside right now. What would have to happen for this price to reverse is a few things. First of all, we have kind of an ascending channel going on here. So that has to break to the downside. So what we have to see from the price, though, is we have to see the price come down here. More than likely, again, it would probably find support at this level unless we had some kind of huge exogenous event come along that was just not priced in. And then from there, what would have to happen is you'd have to see the price set up a lower high. A lower high can be a huge catalyst to a downside move because this is where the bulls pile in, and a lot of them are very weak hands. And so if the selling overwhelms those weak hands, this is where we have the possibility of putting in a lower high and a break of that trend line. So all of these things would have to happen first before we'd see the market reverse into a daily downtrend. So folks, we're stuck in a range for probably the next week or so. Take advantage of it. All right, that's it for today's report. Thanks for listening. We'll see you tomorrow.